headline earnings have increased 145% to 18.6 billion rand, or 70 rand and 87 cents per share, while return on capital is 58%. The company's balance sheet strengthened significantly to the end of the year with 17.3 billion rand net cash, a 14.4 billion rand improvement from the end of December 2018. On the back of the strong results, we're able to declare 14.2 billion rand in dividend for 2019. Today we announce our best ever EBITDA performance. EBITDA more than doubled to 30 billion rand from 14.5 billion rand in 2018, benefiting from the higher US dollar, palladium and rhodium prices and the weaker South African rand, contributing 12.4 billion and 4.9 billion rand respectively. This was partially offset by the impact of CPI and higher royalties of 2.8 billion rand. Our improved operational performance resulted in higher sales of PGMs of 0.8 billion rand and base metals of 0.2 billion rand. Had we not been impacted by Eskom and the load shedding, which resulted in lower mined and refined volumes, EBITDA would have been approximately 1.5 billion rand higher. The impact on the fiscus was 500 million rand in lost taxes. Following the strong EBITDA performance, we have also seen an increase in our EBITDA margins. Our EBITDA margin improved, supported by strong mine-to-market margins from our own mines of 44% and JV mines of 41%. Together with a POC and toll margin of 14%, our total EBITDA margin increased from 20% at the end of 2018 to 32% at the end of 2019. We're less pleased with our 2019 unit cost performance, although we did experience some operational headwinds. Our final unit cost of 22,294 rand is within the updated market guidance we provided in December. Underlying unit costs were up 5% year on year, with the benefits of increased production being more than offset by the higher than CPI labor and electricity increases we experienced. The unit cost is up 8% when including the ore stockpile drawdown at Mogalakwena and the impact of load shedding. Our unit cost per PGM ounce is 10,189 rand, and the all-in sustaining cost of 293 rand per platinum ounce sold against a platinum average realized price of $861 per ounce. We continue to focus on optimizing working capital levels, which reduced to another record low. Whilst we had seen higher inventory levels as a result of the impact of the power disruptions, this was more than offset by the increase in the customer prepayments, which increased by 3.2 billion rand in the period, reflecting the higher PGM prices as well as the weaker rand. This resulted in trade working capital at the end of December reducing to 3.1 billion rand, or 3 days, compared to the 4.9 billion rand we saw at the end of 2018. We continue to maintain a disciplined capital allocation approach, focusing on value enhancing rather than volume. Our 2019 capital expenditure was 6 billion rand, within guidance. SIB capital of 4.8 billion rand was mainly incurred on maintaining our asset integrity and improving safety, investing in additional mining equipment at Mogalakwena, and progressing our SO2 abatement project at the Polokwane smelter. Project capital was 1.2 billion rand, focused on low capital, fast payback breakthrough projects, which included continuing with the Tumela 15 East mechanized section at Amandelbult, the new chrome module plants at Amandelbult as well, and the commencement of the copper debottlenecking project at the base metals refinery. Capitalized waste is 2.1 billion rand. 2020 capex will increase to between 6.8 and 7.5 billion rand to support our continued investment in breakthrough projects and value delivery. The company achieved its strongest ever cash position, ending the year with net cash of 17.3 billion rand, compared to net cash of 2.9 billion rand at the end of 2018. This is a 14.4 billion rand improvement after paying 5 billion rand in dividends this year. You'll recall net debt at the end of 2014 was 14.6 billion rand. So we've seen a 32 billion rand turnaround in the last 5 years. Even if we exclude the customer prepayment of 9.4 billion rand, we would still be in a net cash position of 7.9 billion rand. Most pleasing, the chart on the right, you will see that underlying operational free cash flow increased by more than 200% to just below 17 billion rand. Given our confidence in the underlying cash generation of the business, the quality of our assets in our portfolio, and our solid operational performance, I'm pleased to announce that we've declared a second half cash dividend of 11.2 billion rand, or 41.60 rand per share. That's equal 100% of our second half earnings. This dividend comprises of a base dividend based on our 40% payout ratio of headline earnings of 16.60 rand per share, and a special dividend of 25 rand per share. This is the first special dividend we've declared since 2001. This brings the total 2019 dividend to 14.2 billion rand, or 52.60 rand per share, a 76% payout of full year headline earnings. Finally, underpinning our strategy, we have a disciplined and value-focused approach to capital allocation, with clear prioritization on maintaining the integrity of the assets, continuing our base dividend of 40% of headline earnings, and ensuring a strong balance sheet. Discretionary capital is then allocated to between fast payback, high margin, value enhancing projects, growth investments that meet our stringent value criteria, and additional returns to shareholders. As a result of this capital discipline, we've declared a special dividend for the second half of 2019.